Here's the truth about PMI. PMI stands for Private Mortgage Insurance. Most people really don't understand what it's about, but it's really not that complicated. If you have auto insurance or you have home insurance, you already have a very similar policy. PMI back in the day didn't exist. In fact, when our grandparents bought homes, they really had to have a 20% down payment. Why was it so important that they had 20% down payment? Well, if you think about it, the bank is going to lend you money, and they want to be sure they don't lose money if you default on this loan. So if you don't put any money down and then you never make a payment, the bank is going to lose money because you may damage the home, it will have wear and tear for sure, and they're going to have to pay fees to remarket and sell that home. So if you put no down payment on, all of those expenses are losses to the bank. On the flip side, if you put 20% down, that will cover the bank in all of those possible expenses. So when our grandparents were purchasing a home, they did so by putting 20% down to make sure the bank wouldn't lose money if they defaulted on that loan. But at some point, someone said, hey, there are good people out there who can afford and will make their mortgage payments, and they don't have 20% to put down. How can we get them in a home? The solution they came up with was PMI, Private Mortgage Insurance. PMI is simply an insurance policy, okay? It has a premium just like any other insurance policy does. And that premium covers the cost of the policy. PMI is paid by you if you have less than 20% down. The bank is willing to take your loan with less than 20% down, but they won't do it unless they're covered. This insurance policy covers them on losses greater than 20%. So let's say you put 10% down when you're purchasing your home. Now the bank only has 10% risk because you've given them 10% equity. So now it's important that you have an insurance policy that covers the bank even though you're only putting 10% down. But since you're putting something down, your premium is going to be less than if you were putting nothing down. So the more money that you put down, the lower your PMI payment will be. Now, some people ask, why do I have to pay PMI? Why doesn't the bank pay PMI? Well, the bank is taking the risk by lending you money, and they're going to want to make sure that they're covered. So they put a policy in place, and then they require you to make the payment on that policy. So to summarize, PMI is very simple. It's an insurance policy that covers the lender in case you default. It keeps them from realizing losses that they wouldn't otherwise be at risk for if you were putting a full 20% down. Some people don't like PMI and they think it's a bad thing. But if the only other option is that you have to save for years to get to a 20% down payment, then now you look at PMI and you say it's actually a tool that does excellent things to get people in homes. If you still have questions about PMI after watching this video, I'd be happy to talk you through all the details.